Good evening and thank you for joining us on the program. I'm Edidiong Iwang. Well, let's begin with a story from one of Africa's multilateral institutions. The African Development Bank's board has approved a 125% capital increase to $208 billion, and that's the largest in the lender's history. The president of the AFDB, Akunmi Adesina, made the announcement at the special extraordinary general meeting of his board of governors and shareholders in Abidjan, Cote d'Ivoire. Mr. Adesina says the extra capital would help the bank finance energy, climate and agricultural projects, as well as support infrastructure needed for the success of the Continental Free Trade Zone. The decision caps 2 years of negotiations to give the Abidjan-based bank greater scope to meet the continent's funding needs. The last increase was agreed in 2010. Now, all is now set for the full acquisition of the entire issued and fully paid ordinary shares of Dangote Flour Mills PLC as the commodity giant confirms readiness to pay off its shareholders. In a notice to the stock exchange, shareholders of the issued and fully paid up 4.99 billion ordinary shares as of October the 31st, 2019, will be entitled to receive 24 naira per share in cash for each scheme of shares held. With the Naira escrow consideration funded and the registrar notified, the scheme consideration is expected to be payable within 4 business days of the transfer. Dangote Flour Mill is expected to be delisted from the NSE as 6 of the directors have resigned from the board, with 4 new replacements effective November the 1st, 2019. Now, following the announcement of a merger between the cement company of northern Nigeria with Obu Cement Company this week, the board has scheduled an extraordinary general meeting for December the 4th, 2019. Top on the agenda includes the transfer of all assets, licenses and undertakings, including real and intellectual properties, to Obu Cement. After the meeting, a terminal date is expected to be announced to regulators for the suspension of the trading on the shares of CCNN and subsequently delisted from the NSE. The scheme of arrangement is, however, subject to the approval of the Securities and Exchange Commission. For Nigerian Fintech Week, lots of regulators and operators gathered in Lagos to deliberate on best forms of regulation for the industry. While Channel TV's business producer Temple Ashaju had a chat with the Stanbic IBTC's head of digital business, Emmanuel Aheva, who explains how bullish banks are about fintech investing.
There are about 200 million Nigerians, about 100 million adults. If you look at core commercial bank, only about 40 million are in core commercial banks. So there's a large market that we are currently not reaching. So when we make investments like this, reach more people, we also, increase the size of the pie. We're able to generate more revenue and also able to serve more people. So it is beneficial to everyone, to the industry at large.
In terms of your USSD banking for what is, what are the charges around it?
Well, there are charges that is prescribed by the central bank. So everything we do, in addition to designing this product, we follow strictly the guide to bank charges. And then there are transfer charges, that a customer must pay to be able to use these services. But we make sure it's strictly in line with the guide to bank charges as prescribed by the Central Bank of Nigeria.
You certain are bullish that the markets will reward your bank for these USSD charges, because that remains a major concern. Because as you know, it's not every Nigerian that actually has access to smartphones today, which is why you actually have invented USSD alternative on this.
Yes, no, it is rewarding. See, beyond rewarding, it is reaching the last mile. That is far more important, the reason for this. It's not so much, it's to reach everyone. Okay, those who don't have smartphone, they use a feature phone, we can reach them. Those who don't even have phones, we reach them through agents, which is why we are partnering with super agents. You see a lot of them here today, and it's also one of the things that is included in ATIS.
Well, this week, the Nigerian Stock Exchange held the 7th edition of its Capital Market Information Security Forum, where the conversations focused on the Nigerian Data Protection Regulation 2019, a mandate of the National Information Technology Development Agency. In this interview with the exchange's Executive Director of Regulation, Tinua Diawe, she tells Channels Television about the alignment between the data protection law and the NSE.
This time, we focused on NITDA's Nigerian Data Protection Regulation, which deals with security of information, personally identifiable information, which is information that will allow you to be able to identify an individual. It's a regulation that is applicable to all organizations and provides certain levels of obligations for organizations that hold data. And so we wanted to create awareness about the regulation. We don't feel that there's sufficient awareness within our stakeholder group. So we wanted to ensure that there's that awareness. And we also wanted to ensure that we get people talking about the regulation, because the regulation is in effect, there are obligations and there are sanctions if those obligations are not met. Why is data important? Well, because we're an exchange and clearly our business is driven by data. Why is data important? Because we're in the 4th industrial revolution where data is king. A lot of people say that data is even more valuable than oil. So anything that relates to data is something that the exchange is very interested in, wants to ensure that the ecosystem in which we deal understands the issues, and this was an appropriate thing to do. So we had a very successful forum today. We had consultants come to speak to a full room in our building about these issues, and very lively discussion, everything from what the regulations require to how you go about implementing for compliance, and then some tips on compliance and sustainability of your compliance system with respect to the regulation.
Going by the data protection law, how relevant is NITDA to the Nigerian Stock Exchange in the scheme of things now?
Okay, NITDA is very significant. As you know, our style of action at the exchange with everything we do is we're collaborative. So of course, NITDA is an agency that deals with issues to do with information security, to do with technology, to do with development. And so it's an organization that is important to us. But on this specific issue, because it is almost impossible to be in the capital market. In fact, I can't think of any entity that operates in the capital market that will not have some PII, that's personal identifiable information, about individuals. And what is this? These are things like people's names, people's dates of birth, people's addresses, people's email addresses, anything that will help you to identify an individual. So if a regulator has made a regulation about PII, there's no way that an entity in the capital market can ignore it. So the simple answer into your question is extremely important to us. And that's why we will dedicate an entire one of these fora that we're on the 7th one of to this issue, because data is really the product of what we do in the market.
Now that you will be given more attention to data protection in the Nigerian Stock Exchange, how much should the investing public expect from you?
It's apparent to us that it's necessary to have more awareness about it. And so this was an initial forum that we had. We had spoken to our compliance officers. We have a forum of compliance officers of our dealing members. We will continue to keep that issue live within that forum, as well as within the forum of our CEOs of our dealing members. It's something, as a regulator, we have a number of opportunities to influence the ecosystem, whether we talk about it through circulars, whether we talk about it through this medium, because this interview will also go out, or whether we talk about it through bulletins to our listed companies. And it doesn't always have to be by way of a rule of our own. It's more drawing attention to say, hey guys, in our ecosystem, this is what NITDA has done, their obligations. In processing personal information, there are certain obligations that you have. Ensure that you meet those obligations, because if you don't, there are implications. And even just because this is global best practice. We have the global data protection regulations, which are from the EU. Various other countries have data protection laws. And so in enacting these regulations, NIDA has not done anything strange. It is just simply saying Nigeria is part of the Committee of Nations. Nigerians want to interact with Nigeria as a country, and Nigerians as people want to interact with the world. The world is saying data of individuals has to be protected. We're not ready to interact with any company, any country that doesn't require its organizations to have certain ways of processing personal information. And so Nigeria has joined the Committee of Nations. There's nothing wrong with that. And so it's something that the exchange is interested in and something that we're collaborating in our own way. Not even necessarily having a formal collaboration with NIDA about it, but saying this makes sense. This is something that people should pay attention to.
Since we're here talking about data protection vis-a-vis investors protection, any latest developments in the Nigerian Stock Exchange's Investors Protection Fund?
The Investor Protection Fund is running smoothly. We actually just had a meeting of the Board of Trustees last week. Claims are being paid, being put through our processes, and being paid as once they are verified. As you know, we have two verification processes. We have an internal verification process where we ensure that the claim is compensable under the ISA, which is the Investment and Securities Act. And then we have identity verification, which obviously is very, very important. And it's interesting, it kind of ties into what we're saying, personal identification information on the NIDA regulation front.
So let's just have a recap of some of the stories that made the rounds during the week. The African Development Bank's board has approved a 125% capital increase to $208 billion, and that's the largest in the lender's history. The president of the AFDB, Akinwumi Adesina, made the announcement at the special extraordinary general meeting of his board of governors and shareholders in Abidjan, Côte d'Ivoire. Mr. Adesina says the extra capital would help the bank finance energy, climate, and agricultural project, as well as support infrastructure needed for the success of the Continental Free Trade Zone. The decision caps 2 years of negotiations to give the Abidjan-based bank greater scope to meet the continent's funding needs. The last increase was agreed in 2010. And all is now set for the full acquisition of the entire issued and fully paid up ordinary share of Dangote Flour Mills PLC as the commodity giant confirms readiness to pay off its shareholders. In a notice to the stock exchange, shareholders of the issued and fully paid up 4.99 billion ordinary shares as at October the 31st, 2019 will be entitled to receive 24 naira per share in cash for each scheme of shares held. With the Naira escrow consideration funded and the registrar notified, the scheme consideration is expected to be payable within 4 business days of transfer. Dangote Flour Mill is expected to be delisted from the NSE as 6 of its directors have resigned from the board, with 4 new replacements effective November the 1st, 2019. Following the announcement of a merger between the cement company of Northern Nigeria with Obu Cement Company this week, the board has scheduled an extraordinary general meeting for December the 4th, 2019. Top on the agenda includes the transfer of all assets, licenses and undertakings, including real and intellectual properties, to Obu Cement. After the meeting, a terminal date is expected to be announced to regulators for the suspension of trading on the shares of CCNN and subsequently delisted from the NSE. The scheme of arrangement is, however, subject to approval of the Securities and Exchange Commission. We'll take a quick break now. When we return, we'll review the performance of the capital markets as it ended in October. Do stay with us. Well, thank you for staying with us on the program. The equity market's performance in October came in negative, with the all-share index deeping by 4.78% month-to-date compared to a positive of 0.38% in September. The year-to-date performance also worsened to 16.29%. On the fixed income side, the performance was mixed as investors indicated more interest in the Treasury bills market until the restriction from the central bank, which was announced in the middle of the month. For the greater part of the month, bonds were muted. Well, joining us now via phone is the head of research at FSL Securities, Victor Schiazo, for some analysis. Hello, Victor. Thank you for joining us on the program.
Good evening. Nice to be here.
Okay, so what's your impression of the market in October?
I think for October, the market, as you rightly mentioned, was down by about 4% plus. And though most people expected it, but we didn't expect it to drop this much. But if you look at what happened, it was strictly a loss from the heavyweight. MTN was down about 3.45%, while Dangote Cement was down by 1.39% for the period. So I think those losses from the two heavyweights in the market was what dragged the market significantly down for the month of October. Aside that, I think we all know that the market is bearish and we're not expecting anything kind of uptick. If we look at the results that have come in as well, you can't say they've done so well. We just had a handful that did significantly well in terms of increase in bottom line. So with the depression in numbers, the market performing the negative 4.61%, you say is expected, and we'll wait to see what happens in November.
Well, you mentioned MTN Nigeria and Dangote Cement. What other negative drivers did you see during the equities during this period?
Well, like I said, the earnings that came out, this was the third quarter earnings came out for in October. So would have expected the earnings to have driven the market higher at least to see a little bit of a rebound, but that wasn't the case, because if you look at the numbers that have been reported, you couldn't see most of the blue chip companies. You hardly saw any of them report double-digit growth in terms of top and bottom line, apart from a few like MTN and Airpo. If you look at the banks, there was hardly anyone that actually posted double-digit growth in terms of top and bottom line for the one bank. You just saw them struggling to actually maintain status quo, actually grow gradually, probably 4-5% growth in terms of top and bottom line. So that shows you that there's pressure in the economy, there's pressure on these companies. The headwinds are actually visible. So investors are seeing all this and they feel now is not the time to come into the equities market. They rather go into the fixed income space, and that's why we've seen a lot of activity in that segment of the market.
Okay, so for the bonds debt market, we saw the CBN, restricting banks from open market operations. How did you measure the impact of this ban on the banks?
Yeah, that restriction, I think we all know what happened with that restriction. If you look at what has happened, CBN restricted the local players from dealing in the OMO auction, and we've seen where that liquidity has actually been shifted to. We have moved from the OMO space to the treasury bill space. If you see what happened the last treasury bill auction, we noticed that yields, stock rates dropped significantly. About, I think for the three tenors, 91, 182, and 364 days, we saw a return drop in terms of stock. Currently, 364 days is just 0.26% above inflation rate for December. So more or less, your real return is just about 0.26%. So I think what we're going to see with this CBN circular, CBN's new rule, is going to make depressed yields further. That might be good for the equities market, because once we begin to see interest rates drop to below 10%, I believe that most smart investors will begin to look at the equities market, because whether we like it or not, if we have some stock in the equities market that delivers dividend yield of between 12 and 16%, and that's a first capital appreciation. So I think this would actually be good for in the long term for the equities market.
Okay, but how do you see this ban impacting the key line items of the earnings of these banks?
Okay, for the bank, well, we expect it to, in a way, be positive, because now the banks can play in that space because they're not been banned. The banks can play. And you also know that the liquidity that will actually leave the OMO space, most of this liquidity will go back into the banks as bank placement. So I think it's a good one for the banks. The banks can actually smile in the medium to long term, because definitely most of those liquidity will actually come back to the banks as bank placement, and they can actually make their spread from this system. Right now, the investment, the excess liquidity that you are seeing will actually need to find outlets to actually end up the investment in. So the outlets they currently have, either you go into the FX space, you go into the equities market, you go into bank placements and deposits, or you go into treasuries. So definitely, I think the banks will actually benefit from that excess liquidity. So we expect to see some improvement from that space.
Okay, so is there any reason for the sudden renewed interest in bonds?
Definitely. The truth is that looking at the Nigerian economy and looking at the investors at large, it seems like most of the local investors are risk averse. Most of them are not really looking at taking any significant risk. That's why you see most of them tilting towards the fixed income space, OMO auctions, treasury auctions, and LGM bonds. And we've also seen that immediately that ban was introduced, we saw about 443 billion in terms of naira going into the treasury auction. And that auction was just for a rollover of about 90 billion. So CBN did not take more than the rollover amount. And so there were about 350 billion was returned. So that 350 billion definitely will begin to look for new outlets to invest. So at the end of the day, this fund will actually find its way to these other outlets I mentioned earlier: equities, bank placement, treasury bills, or FX purchase. There are risks to this outlet, especially if those funds begin to go after FX, because that puts further pressure on our naira. But I think in the end, we wait to see how low FGN securities are going to drop in terms of their yield. But I think once yields drop, it's going to be good for the equities market, because at that point, investors begin to look at that direction.
Okay, Victor, now let's get forward thinking about November. What's your outlook for the markets?
My outlook for November, I want to see it in two ways. I think the outlook for November might actually be good because this circular, like we've seen, is going to force a lot of funds to the treasury bill space and the FGN bond space, and that is going to drop yields to low levels, probably levels below inflation rate, where real return becomes negative. And once that happens, I think we might begin to see a shift to the equity space. How soon that's going to happen is going to depend on how fast the rates are going to drop and the yields are going to drop in fixed income space. But I think over the long term, we expect to see a rally in the equity market. So our investors are more or less advised: either you come in now or you try to catch the train when you reach the station. So for me, I think the outlook for the equity market is beginning to get better and a bit clearer. But so November is going to be a month to watch ahead of the year end.
Well, Victor Chiazo, Head of Research at FSL Securities, thank you for coming on the program today. Well, the National Technology Development Agency is hoping to have the General Data Protection Law 2018 implemented anytime soon. The General Data Protection Law 2018 GDPR was released in May 2018, and since then, operators and regulators have been digesting the content. At the NSE Capital Market Information Security Forum during the week, this guideline took center stage, and here are some of the excerpts.
I think that there's a general lack of knowledge or appreciation, so I'm now dovetailing into your answer, about what data protection and privacy is all about. I think people just look at it as another compliance issue, just another compliance box to tick. And for me, that is where I like to start from. Because of my experience in government, I've been in government for about 8 years. I worked at the FIRS. And I realized that while we sometimes tend to look at government as this distant entity who is just trying to dip their hands into our pocket, sometimes we also don't avert our minds to what essentially government wants to achieve when it tries to do certain things. I'm not, holding brief for anyone. I think the NIDA is best equipped to explain itself. And indeed, there are criticisms of NIDA with respect to the NDPR. So the GDPR was, released in May 2018. And I think the whole thinking that drove NIDA, and I must say that the former DG, the immediate past DG, who is now the Minister of Communications, must be commended forward-looking person, and I think the whole idea was, look, Nigeria wants to play in the global community. And so it is time that Nigeria also begins to do certain things that will give it the kind of profile that it needs, So for me, the way I look at it was that the NDPR was a big issue in terms of the ease of doing business in Nigeria. And I'll come to that later on, but let me just explain. So that was the thinking that, drove the leader to say, look, we need to domesticate the GDPR, adopt it, of course, into our own local circumstances and issue it. There might have been challenges in terms of publicity. Was the industry consulted? Were stakeholders consulted? We all just woke up in January and then discovered that a regulation had been passed. Indeed, most people didn't know that the regulation had been passed until sometime in July, when the initial deadline for compliance had, was getting close. And Anderson Tax actually held, a forum in our office here in Lagos. We just said it was our bit to try and get people to understand what it's about. So.
Well, that's it on the program for today. Thank you for watching. I'm Edidiong Iwang.